supposed to do with this semiconductor commodity plays? Look at Micron, MU. It's the chip maker that makes all about DRAMs and flash memory, two basic building blocks found in all sorts of devices from PCs to smartphones. For months now, the stock's been going lower and lower as investors worried about pricing for both DRAMs and flash chips. Turns out those worries were well-founded. Micron reported yesterday, and while the actual results were fine, no surprise given the company basically pre-announced a few weeks ago, the guidance was hideous. Wall Street was looking for $7.3 billion in sales next quarter. Micron says it's probably going to be more like $5.7 to $6.3 billion. That's a shortfall. Whoa. Company believes it's going to earn $1.65, $1.85, but their analysts were expecting $2.44. Why? Because of an imbalance between supply and demand. This has always been the stock's downfall. Chip prices rise, then the industry starts adding production capacity, new supply floods the market, and those chip prices plunge. So even though Micron stock was already down nearly 50% from its late May highs, the darn thing lost another $2.70, or nearly 8% today. Question is, has all the negativity been baked into the share price, or could there be even more downside? Let's take a closer look with Sanjay Mehrotra. Now, Sanjay is the president and CEO of Micron Technology to get a better sense of where his company's headed, and after this brutal forecast, what's next. Mr. Mehrotra, welcome back to Mad Money.
Hi, Jim. Good to be back on your show.
Okay, Sanjay, we got to deal with the notion of something that you call an air pocket. You say that this can end and that people basically should be willing to ride through it as you keep buying back stock. Give me a bull case which says that the stock may already be bottoming and pricing in a turn in the second half of 2019.
So, Jim, what I would like to point out to you is that the end market demand drivers for memory and storage continue to be strong. When you look at some of the recent reports from enterprise customers of ours, their reports continue to show solid growth. You look at hyperscale cloud operators that have recently reported results, they continue to show solid growth in cloud as well. And memory and storage are very much at the heart of these trends. What we have experienced, as you mentioned earlier, and I mentioned in the call yesterday, air pocket with respect to some inventory buildup by our customers. And what we anticipate is that this inventory will be cleared up at the end of with our customers by the end of first half of this year, within a couple of quarters. And at the same time, we have taken decisive actions to contain supply. Others in the industry have also announced actions related to supply cutbacks. Those effects on the supply side will result in supply coming into better balance with respect to demand, and a second half of calendar year to be improved compared to the first half. So most important thing is that the end market demand drivers for memory and storage continue to be vibrant. Our customers' demand is strong. Our customers' demand from us is impacted in fiscal second quarter because of the inventory buildup. Okay, and then supply cutbacks will kick in.
Well, let's talk about the inventory buildup. When you were here last, and it was after a great analyst day, I know that you kind of felt that maybe this would be a little bit different, that there wouldn't be just this double ordering and then a surge of supply, and then you go back down. It seemed like it was a little bit more like the way it used to be. What can mitigate that, sir?
Well, I think what you have to look at is that over the last couple of years, the DRAM demand has gone up substantially as DRAM really has built strong value in the end market applications such as cloud, such as automotive markets, such as graphics. So this demand has gone up over a couple of years, unprecedented levels of pricing and unprecedented level of demand increase over a couple of years. And that led some of our customers to build up some inventory because they were fearing shortages. So yes, we are in that air pocket where this inventory has to be cleared from the customers. But again, the main point is that the end market demand drivers continue to be more diverse than they have ever been in the past, because now you got cloud, you got data centers, you got graphics applications, mobile, PCs, and of course, automotive, industrial IoT. All of these need more memory in order to ultimately deliver the value in their applications, in their end markets. So that's very different from times in the past.
Now, you have been buying back stock. Maybe it's okay to pull back, let the stock, say, go under the $27.50 book value, get a little bit better value. Why stand there and get your head beaten in like you have for the last 30 points?
Well, we plan to be disciplined in terms of managing our share buyback. We have announced our intention that 50%, at least 50% of our free cash flow we'll be putting towards share buyback. In our fiscal Q1, we bought almost 80% of our free cash flow and put it toward share buyback. We will plan to continue to do so on a disciplined basis, at least 50% of free cash flow going toward share buyback, because we believe that in the long term, the markets for our products are strong. Micron is in a very different place. We continue to gain on cost competitiveness, narrowing the gap with competitors on the cost side, as well as building a portfolio of high-value solutions, which really assures us of strong profitability in the future. And we are confident about our future. Therefore, we'll continue to invest because we think from a long-term point of view, Micron stock is a great value.
Okay, one last question. Is there any way, sir, that everybody cuts back pretty much at the same time? You guys have been cutting back, and we get an earlier bottom than the second half of 2019? We had an earlier top. Is it possible to get an earlier bottom?
You know, Jim, it's always possible. And typically, the second half of the calendar year tends to be seasonally stronger for our industry. That's why we are saying that, by second half, we expect industry fundamentals to be improved compared to the first half.
Excellent. Okay, well, look, buying back stock, believe it in the situation, definitely much better than it used to be, I will say that, but it's been a big decline in the stock, and we're mindful of that. Thank you to Sanjay Mehrotra. He's the president and CEO of Micron. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.